Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, ICE Brent crude oil futures. An immediate countering bullish engulfing pattern on Friday after the previous session's key reversal down and bearish double, which also hid an indecisive spinning top pattern. Overall, the market mostly remained within the stratified and layered congestion stretching from 68.69 up to 72.29, but which at the close pushed up through the top of this congestion. Further above is another congestion between 73.18 to 73.73, the latter being the important 50% absolute Fibonacci line. Additionally, the market is also still within the bright green December 25 based bullish Andrews pitchfork, in between the overhead bright green middle tine, currently 72.10, and the bright green upper tine above, currently at 74.62. This bullish Andrews pitchfork has been the recent showrunner for this market. Finally, we still have target X overhead at 73.25. This is the target for the doubling up of the break above the May and July 25 to January 26 bear channel. 2 weeks ago this looked quite far, but now not so much. Okay, so far today, a gapping higher move after the weekend's events over the 73.18 to 73.73 congestion, right through that target X at 73.25, up and out of the bright green Andrews pitchfork, over the April 2019 high at 75.58, thus this is now becoming a possible support, up through the close together 50% Fibonacci lines of the April 21 to March 23 move at 77.54 and the December 23 to April 25 move at 78.05, and up through a fairly free area overhead until the August 23 low at 81.86, and halting just before the interesting combination of the January 25 high and the 61.8% Fibonacci line of the December 23 to April 25 move, both at 82.68. Now, I have decided to try something different and draw a start of January, start of February bullish Andrews pitchfork to try and accommodate the large breadth of move we have had today. I'm not happy about this, as it sits, has a significant majority of action that's taken place outside the pitchfork, but I wish to try it to see if it fits. We are right now just below the middle tine, currently at 78.64, and we're sitting on that congestion, the 50% Fibonacci line for the December 23 to April 25 move at 78.05. Spot gold, bullish closing white Moreira on Friday and third bullish white soldier after the previous session's indecisive spinning top. The market continues moving up and away from the bright red February based ascending triangle pattern, which is currently 50.44 to 51.11, my apologies, even though this pattern does not have the correct number of touches within it. I had last week laid out some targets for this pattern of a primary target X in the 54.40 area, around where the 100% projected Fibonacci line sits at 54.48, with a harder to reach secondary target X1 up in the 55.80 area, just under the all-time high. As I said earlier, this is not a perfect ascending triangle pattern, so please bear that in mind, though the overhead area is fairly denuded of resistances for quite some while. In the bigger picture, we have the dark blue late December 25 to early February 26 bullish Andrews pitchfork, which I drew 3 weeks ago and which I still consider able to show the potential bullish angle of attack of this market. I may of course finesse this to a shallower bullish shift pitchfork for the same move should needs require it, but right now this works as it is, and we're in between the dark blue lower time below, currently at 50.67, and a dark blue middle tie and above, currently at 5,700. Now, so far today, after this weekend's events, to be honest, a relatively small gapping move higher, which has since been largely filled in. The top side is very close to target X at 54.40, but has not quite managed it as yet. Interestingly, today's action is looking like a possible indecisive spinning top right now, of all things. Bitcoin. An immediate countering bearish double yesterday after the previous session's bullish harami. This once again helps the whole small dark blue sideways triangle, currently 67.058 to 68.309, formed over February. The core of this pattern has been a rotation around the bright red neckline extension. It's currently 67.607 to the August 21 to January 22 head and shoulders top pattern. And prices yesterday tested above it once again, but closed below it. The support that held up the market in the end was the April 21 high at 64.929, just above the important 50% absolute Fibonacci line at 63.129. Further above, we have the October and November 21 highs at 67.058 and 68.977 respectively. For the moment, this has stayed the risk of retirement, but it's held it off, and that's of the final secondary target X below for the break under the sideways triangle in the 58.017 zone. Now, going back to that bright red neckline extension, I had said last week and the week before, and I think is a very prescient quote, this bright red neckline extension is a key element in any moves lower, as it is a sentry ahead of the important 50% absolute Fibonacci line at 63.129. This statement is still valid today, as this 50% absolute Fibonacci line has halted the declines throughout late February. And as I also warned last week and the week before, and I quote, please look for any confirmations below rather than just the one close, a common mantra in all such things, end of quote. In the bigger picture, we still have a very large October 25 to date bearish halfway hesitation in progress. The primary and secondary targets for this pattern already achieved, leaving just the much harder to reach tertiary target X2 down in the 54,000 zone. Now, there had been the beginnings of a question mark over this, as we were set up last week for a possible weekly key reversal. In the end, it became a weekly key reversal down, something that is echoed in Ethereum coin, but not in Solana coin, where we have a lesser outside week prevailing. Additionally, there is another pattern, a bearish pattern, that I would like to address, and one I had previously considered. It's a February-based cat's ears pattern. This is a small double top pattern that forms after a big drop, such as the one we had in early February. The key trigger for this pattern was the low 3 weeks ago at 65.080. Last week we had consecutive closes below this level, so I laid out possible targets below for this pattern, of a primary target X1 down in the 59.223 zone, and a secondary, harder to reach target X3 down in the 57.986 zone. Given the recent action, I will stay retiring these two targets below for this week at least. Finally, as I've said last week, we have the potential showrunner for this recent move lower, and that's the bright green early October 25 to mid-January 26 bearish Andrews pitch hook. The market today in between the overhead bright green upper time, currently at 74.263, and the bright green middle time below, currently at 51.833. There is no change to this point of view right now, but I am of course prepared to finesse this bearish Andrews pitch hook into a shallower bearish shift pitch hook for the same move should this be required. So far today, well, not that much, as we stay below the dark blue, just below the dark blue lower uptrend of the sideways triangle and above the 50% absolute Fibonacci line. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.